In this video, we're going to talk about Rule 446. All markets are intercorrelated and interdependent. The key thing to note, all markets are intercorrelated and interdependent. When you look at all markets, that means the stock market, commodities, forex, and crypto. Understanding cross-correlation involves looking at the Tier 1 charts, the Tier 2 and the Tier 3. For example, if the US10Y and the US2Y yields are going up, expect negative price momentum on gold and silver. Typically, the US10Y, the US2Y impacts the DXY and vice versa. So these three tend to move together. Sometimes it's very difficult to understand the direction of the DXY. That means that you can look at the euro dollar. If the euro dollar is going up, you expect the DXY to go down. Then we can cross-compare the DXY to the US dollar Japanese yen pair or dollar yen. They tend to move in the same direction. If the DXY is going up, dollar yen is going up on average. Another thing to note, if the DXY is going up and the US10, the US2 are going up as well, the euro dollar tends to come down under those circumstances. Dollar yen tends to come up. If that is occurring and the DXY is coming up, we would expect the VIX to also come up and the S&P 500 and the NASDAQ and the components of the stock market and also crypto to come down. Gold and silver are typically hit as well. Learning these associations and intercorrelations is very, very important. When you've got your intercorrelations connected, the next most important thing is market structure. In fact, market structure is even more so. It's even more important. In yesterday's video, we discussed market structure as per Rule 654. Price is always moving from SL to SL. When it moves from one SL, and SLs, or Stanfield levels, are the most statistically significant support and resistance lines in existence. In this video, we're going to look at cross-correlations for the S&P 500, the DXY, and Bitcoin, junk, and the US 10-year yield. We're also going to be looking at the structural levels across all of these things, including Tesla, Microsoft, the US 2-year yield, and the euro dollar. It typically takes decades to gain this level of insight into the market. I hope it really helps you out. And if you have any questions, please let me know in the comments. First of all, we're going to look at the charts with just a pure correlation in mind. The S&P 500 has been doing really well recently, and we saw that there was a rally inside the market, but things have looked to be stalling out. This time period is approximately 1 week. If the bulls can gain and increase control inside the market, we would expect the S&P 500, which closed out at 49.97, to come up to this 50.42 level. If the bears gain control, we would expect a drop to 49.30. I'll do a pass through without showing the SLs, and then we'll come back and turn on the SLs. Microsoft closed out at 414 and it's post-trading at 413 and 50. We saw a similar breakout in Microsoft and a similar area of resistance. If the bulls gain control, we would expect Microsoft to go up to around that 418. If the bears gain control, around 405. We'll look at market structure on the second pass. Bitcoin has been rallying strongly because all markets are interdependent and intercorrelated. We've seen that Bitcoin took off and it's currently 45,388. If the bulls continue on their merry way, we would expect 46,341. But if the bears gain control, we would expect a push down to 43,491. We'll look at the structural levels on the second pass through. Junk bonds can give us a really good indication if the market is healthy or not. We've seen junk bonds retrace recently, then stage a bit of a comeback and now flattening out. This should bear a lot of resemblance to what's happening inside Microsoft and the S&P 500. Junk bonds closed out at 94.51. If the bullish case continues and we get a breakout above this level, we would expect to close out at around the 95.15. Under a bearish scenario, we would expect price to move down to that 93.87 mark. If prices move down on junk bonds, we would expect the S&P 500 and the component stocks to retrace as well. If junk bonds breaks above resistance and starts to really go for it, we would expect the S&P 500, the stock market, and crypto to rally. If you're trading and investing, it's very important to know how different markets intercorrelate and connect. When we look at the euro dollar, what we're really looking at is the inverse of the DXY. And when we look at the DXY, we're also understanding the US10-year and the US2-year as well. You can see that the euro is currently 107.75. If the euro comes down like this, we would expect the DXY to go up. If the DXY is going up, we expect the 2-year and the 10-year to go up. Negative momentum to be placed inside the stock market and also crypto. But it's not a pre-drawn conclusion that it will come down. We have to always have our three-dimensional thinking on at all times. The bearish case is for the euro dollar to come down. The bullish case is for it to go up to 108.42, to come down on the bearish case to 107.33. Investors and traders, when they start, they'll just go into the chart that they're putting money into. And that makes a lot of sense because people are taught to do that by often retail investors and traders. But you don't want to do that. You want to intercorrelate. When we look at total crypto market cap, what we're seeing is it's currently $1.676 trillion. The bullish case is for crypto to go up to $1.718 trillion. The bearish case is for crypto to come down to $1.635 trillion. The only real way you know if something is going up or down is to put on the SLs or the Stanfield levels, but we'll get into that in a moment. Let's have a look at Tesla. Tesla closed out at 189.52. It's just trading in post-market hours, just a little bit down. If we have a bullish case, we expect Tesla to come up to the 195 mark. A bearish case to come down to the 173.45. And again, we cannot tell which direction is likely to be the one direction that it's going, unless we pop on the SLs, but we'll do that next. Before throwing on the SLs, it's also important, it's vital to look at the DXY. A bullish case would see the DXY coming up to 104.42.45. A bearish case coming down to 103.98.19. The DXY is currently 104.1360. If the DXY comes up, we would expect negative price momentum on the stock market and crypto. We would expect positive momentum on the US 2-year and the US 10-year. Everything is gauged by SLs, and this is a really important thing. SLs mean market structure. The US 2-year yield closed out at 4.46, and if we get a bullish case on the US 2-year yield, we would expect 451.17, and a bearish case 438.86. If you're invested in stocks, commodities or crypto, you would want a bearish case. You want it to come down because that is what will push things up. But it's not just the US 2-year, it's also the DXY, the US 10, junk, the VIX, so many other things. Understanding how all these charts connect like a spider web is a fantastic thing to be able to do. It typically takes a decade to see this inside the market. But of course, it can take far longer as well. We know that the US 10-year yield is vitally important if we understand where the 10-year is going. The DXY and the 2-year, we're off to the races. And the 10-year is currently 4.1580. A bullish case would see 4.2014 and a bearish case 4.0896. What we need to do now is throw on the SLs, which show us market structure. Okay, let's go for that. We can see that the US 10-year has so much structural overhead resistance. This is exactly why the 10-year has had a lot of trouble getting through this area. And that's what we want. We don't want the 10-year to rally. We can see that there's very strong structural overhead resistance and quite light structural underneath support. If the US 10-year yield starts to break below this 414 mark, we could be in for a real rally inside the stock market and crypto. What about the US 2-year yield? Are we seeing the same kind of thing? Let's just pop on the indicator, and now we need to interpret this. You can see it's a different kind of scenario. We had a lot of underpinning, one structural resistance, but it's confirmed as structural support. When we see this structural support, that's important, and we see that there's very little overhead structural resistance. This means that the 2-year could rally up. It's very different with the 10-year, which are like mortgage rates. The 2-year are like savings deposit rates. The 2-year at this stage could go either way, but it's favoring an upward momentum move. The DXY is vitally important to understand, so let's interpret this structure. What we can see is the DXY confirmed this as structural support and then sought to come up to structural resistance and has been rejected from that. We also are starting to see a bit of a turnaround, a loss in negative momentum. This is favoring an upward tick in the DXY and a potential retracement inside the major indices and crypto. If you get a retracement, don't worry about it. A retracement is an ideal opportunity to get onto the right side of the percentage. It's therefore helpful to look at the euro dollar. Let's just pop on the indicator and interpret this together. What we can see is the euro dollar has a massive amount of structural under support. And when you have a lot of structural support underneath price, this is where we would expect price to come down and dip into this area, find a buy, and then push upwards. A lot of times, traders and investors, especially new ones, just want a light switch. Is it going up or is it going down? Financial markets aren't designed that way. They're designed through probabilities. So we can see the probability of the DXY coming down or rallying is really dependent on what the euro dollar is doing as well. We know the US 10-year has a lot of structural resistance. The euro dollar, a lot of structural support. These are two really good things that we can use to stack probabilities. Junk bonds are a very important thing for us to look at. When we pop on the indicator, what we're actually analyzing is statistically significant structure over all of price history. With junk bonds, that's in excess of 5,800 days. We can see a very interesting thing. Junk bonds has been just interacting with this specific line of structural resistance. It's tried to convert these into support, but it's struggling at the current time. The good news is that junk bonds has a tremendous amount of structural support below its current price. You can imagine if you were looking without the indicator, you just don't know what's happening. And also we can see a structural resistance level a little over 95. We want junk bonds to come up and break through this and challenge this 95 level. We also see there's a lot of structural support down here, which would create a technical bounce, which could exceed that 94.65 mark. Now we've got a bit of a position on what's happening inside the market. Let's have a look at Tesla and see what the structural support and structural resistance levels are doing. Unfortunately, Tesla has a tremendous amount of structural resistance overhead. This is quite difficult for price to get through because there are so many sellers trying to push Tesla's price down. Structure is literally everything, and when you get fresh air gaps, you can see the price can come down relatively quickly. So it's important to know where the structural support levels are. At structural support, you can grab bargains, and this is how you want to think about the market. Financial markets are a little bit cuckoo. Basically, people only want to buy when the price is going up, and they only want to sell when the price is going down. If you think about this in reality, it's like you going to a department store and saying, I refuse to buy at a discount. I'm only going to buy if it's 20% more than what it should be. Let's have a look at total crypto market cap. Total crypto has been going in excess of 3,900 days. What do we see inside total crypto market cap? We see that there's a lot of structural overhead resistance, and this particular area of structural support has not been confirmed yet, around that 1.642 trillion. If we get a spike in the DXY, a spike in the US2Y, it's going to be muted if the 10-year spikes. If that happens, we would expect the euro dollar to go down and junk to go down. However, there's one thing, there's a potential of a limited move down, and this is what you always want to be thinking. These structural support and resistance lines, they're very, very powerful. They're the most statistically powerful lines in existence that you can put on any chart, and you can do it yourself. This naturally brings us across to Bitcoin's levels. What is cooking with Bitcoin at the current time? We can see already that Bitcoin just crunched through this very strong level of structural resistance, came up to the next one, and has come into quite a degree of structural overhead resistance. But the resistance up here above 46,400 is the key level that we want to watch. If we find that we can't get above 45,400, if we can't go this way, we're coming down, and in all likelihood coming down to 44. If you really believe in what you're trading and investing in, this is like getting a discount. This is the ideal time to be in the market. Instead, what the majority of people do, any negative price momentum, they run like hell. It's just the weirdest thing you could possibly think of. It's like getting a discount on the thing that you really want to get into and saying, oh no, I need to pay more for it. I can't pay less for it. It must be more. Let's have a look. What is Microsoft doing? Let's throw on the structural levels and see what it's telling us. What you're literally seeing is the reality of the market. All of this area is very strong structural resistance, and there's a lot of different layers here. It's important to know where this exists because it's going to be hard for it to get through unless certain conditions are met. For example, if the DXY, the US dollar currency index rallies, expect a movement down to around this 406.50 level. If the US2Y, the US10Y rally, expect downward price momentum. But if the euro dollar is going up, junk bonds are going up, and the DXY is failing, it's going down, and the US2, the US10 are going down, expect a movement up. Having been inside financial markets for nearly 40 years, one thing that I've seen, people want really simplistic answers for incredibly complex questions. Of course, this makes a lot of sense, but it doesn't help you. You don't need certainty, you just need a strategy to deal with uncertainty. The best way to do that is to know where your structure is, the structural resistance levels, the structural support levels, and especially the accumulations of strong structure. That will make an incredible difference. We can see that the S&P 500 is in the middle of a fresh air gap, but it's been suppressed due to junk bonds and the yields and the dollar interacting with each other. Everything is connected. That's why if you're only trading one specific chart, you're in a world of hurt because you just don't understand how all the component pieces are moving together. With the S&P 500, the direction will be very dependent on what the DXY and the yields do. Just bear this in mind. It's going to be important. And you can always look at the futures as a way to gauge which direction it's going. Always bear in mind that prices are always moving in a wave. They're coming up, they're going down, and all around the place. It's just a wave function. As soon as you understand this, the markets are not so scary. If you're buying on the way down, that could be the best possible thing because things just move in a wave. It's not a reason for concern, it's a reason to celebrate. And just keep these things in mind. Please do not exit the market when prices go red. You must fight that retail mindset. The retail mindset says sell at the top and buy at the bottom. But nobody's in the market. No one retail is in the market when the price comes down. They're all scared to death and they run like hell. You do not want to be part of this group. You want to get really excited as price comes down because everything moves in a wave function. The up moves never last and the down moves never last either. It's just an up and down parade. It's important to get used to it and have your strategies of dealing with this uncertainty. And uncertainty is simply overcome by stacking probabilities. Please let me know in the comments, where do you think the main markets and crypto are going to next? Always bear in mind, Rule 654, it's a very, very powerful rule. Price is simply moving from clustered SLs to other clustered SLs. If you would like the TradingView indicators that I use on the Tier 1 charts, the Tier 2 charts, and the Tier 3 charts, you can just pop across to ctksmethod.org. They're waiting there for you. I hope this video on Rule 446 has really helped you out. The intercorrelation and interdependence between charts is something that you need to master. If you have any questions on this, please let me know. And I just want to say thank you to everybody who comments on the videos. It's just awesome. We have one of the best communities on YouTube. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And don't forget, remain positive. It's really important. Bye for now.